Welcome to the Right Club Podcast, where the focus is on helping you, the real estate investor, advance to the next level. And now let's join this week's hosts and share ways for you to customize your life.
Underused housing tax. This one is a bigger one. This is probably is going to impact a lot more people and likely impact people who are unsuspecting of it. And you'll see why as we go through it. So what is the UHT? What is the underused housing tax rules? This is effectively a 1% annual tax that is being imposed on the value of residential real estate in specific circumstances, and it's meant to target non-resident or non-Canadian citizens who own residential rental property that is vacant or underused within Canada. So that's a bit of a long summary, and we'll break it down for you because there are a lot of minute details that are important to pay attention to. As mentioned earlier, these rules came into effect. They received royal assent back in June. They were proposed in the budget last year by our government, and they are effective January 1st of 2022, so last year, meaning you need to file this tax return, if it applies to you, by April 30th of 2023. So we only have about a month and a half or so to learn about this, understand if it applies to you, and file the tax return. So what is it? Who does it apply to? Who does it not apply to? When do you have to file? When do you not have to file? So it's important to understand, and we'll break this up into affected owners, individuals who are required to file the UHT return, excluded owners, individuals who are not required to file the return, and then we'll get into who is subject to tax and who is not subject to the tax. So affected owners, who does that include? It includes any foreign or domestic non-public corporations, meaning any privately held corporation needs to file this UHT return. Individuals, any individuals who are non-residents or non-citizens of Canada are required to file this return if they own residential property, not, and explicitly any residential property, not, it doesn't have to be rental. We'll get into that also in a later slide. Trustees of trusts, including bare trusts, are required to file this. So if you're the trustee of a trust and that trust owns property on behalf of its beneficiaries, the trustee, being the title owner of the property, is required to file a UHT return. And partners of partnerships. So if you own a property in partnership with other owners, you will be required to file the UHT return. So it gets a little bit confusing because when they speak of individuals, you'll see certain individuals, that, like a Canadian citizen, for example, is excluded from filing the return. But if that individual is a trustee of a trust who owns property, all of a sudden they become an affected owner. They become an individual who has to file the UHT return. Likewise, if you're a Canadian citizen and you're a part of a partnership, you then have to, by default, file the UHT return. I think what happened, and it's only my best guess, they drafted this legislation relatively quickly. They didn't add enough specific details into the exclusions, so there was some extra individuals or people or circumstances that got captured in the broader net that they were trying to cast.
Thanks for listening to the Right Club Podcast, where the focus is on helping all levels of real estate investors advance to the next level and help you customize your life. Be sure to tune in next week at rightclub.com/podcast or wherever you listen to podcasts. And if you get a few seconds, please rate the podcast wherever you're listening. It helps the show get noticed by others like you, and we truly appreciate it. And don't forget to subscribe.